Jonathan Hayek joins me, and you can learn what he is up to by heading over to jonathanhayek.co. And you can see that scrolling at the bottom of your screen or as a clickable link in the show notes. Jonathan, I appreciate your time as we talk about your journey through real estate investing, landing in single-tenant industrial properties. This should be a good conversation. Thanks for joining me here today.
Jack, thrilled to be here. Sincerely looking forward to this conversation.
Well, it's always interesting, and especially in your situation, because I understand you were formerly a school teacher, finding yourself into real estate investing. Would you mind giving us the high level? I don't want to spend half of the program on this, but it's sometimes more than not an accidental occupation when you find your way to real estate investing. How did you?
Sure. Mine was very purposeful, but I graduated college with a degree in special education, and I taught special ed in various settings, K through 12, for 8 years. And towards the end of my teaching years, my wife and I really got to talking and thinking about where are we headed, what is our vision for our lives and for our family. And we really decided that we value freedom, financial freedom, time freedom, geographical freedom. And we just thought, this full-time teaching thing is probably not going to get us where we want to go. And I had some great years of teaching, but it was ultimately not going to get us, financially speaking, to the place where we wanted to get. And so towards the tail end of my teaching, I started dabbling in flipping houses. And so we thought, this is the way to start. And so we bought our first house from a wholesaler. We flipped it, and the idea was to start flipping houses and use the capital that we generated from flipping houses to build an empire of small multifamily properties. So 2 units, 3 units, 4 units. And we did that for a while. It worked. As a teacher, we had a real capital problem. And so flipping really provided the capital we needed to buy some of these small multifamilies. But as we'll get into in the discussion, I eventually realized that building an empire of small multifamily properties was also not what we ultimately wanted. And so I am now building a portfolio of single-tenant industrial properties. And I'm happy to go into exactly what that means and how I got here.
Yeah, I'd be curious, one of the things that I would like your point of view on before we get into that is you mentioned that first property you bought was from a wholesaler. Knowing what you know now, how do you think that relationship would have been different?
I think it was the right move. Even looking back on it, it was a fine deal. And I call him a wholesaler. He was actually another house flipper in town who I think had a batch of properties that I would call headache properties, pain in the butt properties. If anyone has flipped houses before, we sometimes acquire, some properties where we're like, what in the world am I going to do with this? This property is going to be a headache. And so I think he was kind of overwhelmed with properties he had at the moment. And so he had a bunch of properties he wanted to get rid of that were just going to be kind of a pain in the butt. And so I bought one of those pain in the butt properties. And even looking back on it today, I think it was a fair deal for everyone. I have no idea what he bought it for, but I bought it for $67,000. I ended up putting, I think, about $60,000 into it and sold it for about $180,000. And so that first deal was so crucial for learning the important lessons of working with contractors, pricing out materials, how long a property is going to take to sell, all those sorts of things. And so I don't look back on acquiring that first deal from a wholesaler as a mistake or anything like that. I think it was a fair deal. It built my relationship with that other investor, and it gave me some really valuable experiences that I needed to have to learn those important lessons.
How important was it to your mindset, kind of demonstrating that this actually could work?
Crucial. Mindset, like success in real estate is like 90% mindset. And going into that first deal, I remember driving back from a ski vacation with my wife, and before we left on vacation, we had seen this property. We had walked through this disaster of a property, and we were just hemming and hawing. Can we really do this? Can we come up with the money? Do we know how to do this? What if this happens? What if that happens? And then finally we're driving back from that vacation and we said, let's do it. And so I think as we were driving back from that vacation, I called Sean, this other investor, and I said, hey, is that property on 9th Street still available? He said, yeah, it's still available. I said, all right, I'll take it. And so just going through that process of going into a situation and a deal, not knowing what the outcome is. I think a lot of listeners out there, and I fall into this as well, of being a type A kind of person where we want to know all of the steps along the path. We want to know how the story ends before we even begin the story. And that's just so often not how real estate works. And so that deal was a confidence building deal. I ended up making money on it. I shared the numbers a minute ago. I made, I think, about $38,000 on it before taxes. And it was crucial in just building confidence and building my mindset that after that, I ended up flipping. I've probably flipped about 25 properties in the last 6 years. And so not tons, but enough to have some confidence. And that first deal was crucial in building my confidence and giving me the mindset of, hey, I don't have to have everything figured out on day one, but I have the skills and I will figure things out as they come up.
You mentioned that initially you took some of those funds and started buying small multifamily properties. What were some of the pain points there that made you decide that this isn't where you wanted to be?
Sure. So building a portfolio of small multifamily properties is aspirational for a lot of investors, and there's nothing wrong with it. It's a great asset class, and it's a wonderful asset class that can, if you buy right and you select the right tenants and you manage the property right, it can be a wealth builder and a cash flow generator. But what we found was going back to the freedoms that I talked about is wanting geographical freedom. I'm a DIYer to a fault. I was self-managing. And if my wife and I, and now my kids, my family, if we want to travel, it becomes challenging self-managing and having this portfolio of small multifamily properties because stuff is going to come up. And there are certainly tools you can put into place, like having handymen and coaching your tenants and even having a property manager. But it was ultimately just a little too management intensive. And we could certainly have gotten a property manager, but property managers are going to take 8 to 10% of gross rents at least. And that was just not a price we were willing to pay. It took our returns below a point that we were happy with. And so those small multifamilies were great properties to learn important lessons. But we ultimately decided that we wanted to transition to something more passive.
And this led you to the single-tenant industrial properties. Could you define that a little bit for everybody? What do you mean by that investment?
Sure, absolutely. Single tenant industrial properties, these are the most unsexy properties that you can think of. So think about a property that a plumber might occupy, that a landscaping company might occupy, maybe a woodworker, a contractor, a glass and window manufacturer, a granite fabricator, all these types of blue collar service oriented workers have to have a shop somewhere. So these properties that I'm focused on are generally in the 8,000 square foot to 15,000 square foot range. And there's only one tenant. So it's kind of like owning a single family home, but it's one tenant. And some of the things that I love about this asset class is, number one, there's a supply demand imbalance. There is incredible demand for these properties by tenants, like I just mentioned, and the supply is either stationary or it's decreasing. Some of these properties are actually being torn down for better uses like multifamily or retail strips, something like that. But the demand is staying steady or possibly increasing. And so there is a real supply demand imbalance for these types of properties. Second thing that I really like about these properties is that the tenants are incredibly sticky. I own two of these currently. One of them, the tenant has been there for over 20 years. The other one, the tenant has been there for over 40 years. So these are tenants that are there long term. These are properties that are dependent on the employees. These businesses employ these workers, and they're responsible for these employees' livelihoods. And so this is not a type of decision. Staying in this property is not a haphazard decision by this business. This is a really thoughtful decision that this business makes to stay in these properties. And then the third thing that I really love about these properties is they are on what are called net leases. You might have heard the term triple net lease. That's sort of a loaded phrase, but I just call them net leases. And these are the types of leases. They're generally long-term. They often have annual escalations in them. And best of all, the tenant is responsible generally for taxes, insurance, and a lot of the day-to-day maintenance of these properties. And so it creates a very low maintenance, fairly passive investment for the owner.
So where is the market that you typically focus in? Is there part of the region, United States, or is it almost anywhere?
I'm pretty open. I've got some base characteristics. So right now I own properties in Cheyenne, Wyoming, and Oklahoma City. And in general, what I look for in a market is that there's a growing population, that there is that supply-demand imbalance, and that there's a population of at least 100,000 people. And so other than that, I'm really open to all parts of the country. I prefer tax-advantaged states. But yeah, those are my general characteristics. And if a value add property, I can talk a little bit more about, the characteristics of a property that I look for. But if the property falls within those characteristics, I will certainly entertain it.
So what are some of those characteristics that you'd be looking for?
Yeah, so I am a value add investor. I always have been. So much like buying a distressed single family home, which I have done. So think about when you're buying a single family home to flip or maybe to hold as a rental. You're looking to build wealth and add value. And so you're looking for things like outdated bathrooms and outdated kitchens and maybe landscaping that doesn't look very good. Things you can do to the property that can add value. Well, in these industrial properties, I'm looking for the same thing. But instead of outdated kitchens and bathrooms, I'm looking for expiring leases. So one of the big ways to add value to an industrial or almost any commercial property is an expiring lease. And I'll explain that a little bit. For many commercial properties, a big part of the value is derived by the lease. So NOI, net operating income. So how much money annually is the property generating? So that's one aspect of it. The other aspect of it is how long is the lease? So a lot of investors in this space value long-term leases. And so you think about, like Starbucks or an In-N-Out Burger or a Family Dollar. A lot of these properties are owned by a third party. They're not owned by the corporation. They're owned by some guy like me or like you, Jack. And we sign the tenant to a long-term lease. And so they might have a 10 or 15 or even 20-year lease on these properties. The leases on my properties aren't quite that long. They're generally in the 5 to 10-year range. But investors value the long-term nature of these leases because it's I don't want to say it's a guarantee, but it is a signed lease. It's a signed contract from this tenant that they're going to pay rent every month for 7 to 10 years. And that's pretty incredible versus if you have a single family where it's generally a 12-month lease, there's a possibility of having vacancy every single 12-month period. Whereas in these properties, there's a high value placed on a longer term lease because then this investor knows, hey, I'm good for 5 or 7 or 10 years. I don't really have to worry about this property because I know the tenant's going to be there and they're going to be paying me every month.
So how are you finding these properties. And before you answer that, I want to direct everybody one more time to your website, jonathanhayek.co, to learn more about what Jonathan is up to. If you found some value in what we're talking about so far, do us a quick favor, share this with one of your investor friends. And if you're watching us on YouTube, give us that like and subscribe. So, Jonathan, like I asked you before, I just went through that spiel. How are you locating these properties? Are they brokerages? Are they coming to you directly? How are you finding them?
It's like a lot of asset classes in real estate where it just depends. Deals can come from all over. So generally, when you get to this sort of level, these types of properties, they're coming from on market and brokers. But I will say that I closed a deal earlier this year in January that was completely off market. And that was from a broker relationship. I had sold a couple properties with with certain broker that I have a relationship with. And I said, hey, James, I'm looking for, this, and this, what I've just outlined. If you know of anything, just let me know. So he's just sold a couple of my properties. He knows I have the cash. So he comes back to me the very next day and says, hey, you know that B&W glass building? I think that's available if you want to look at it. And I said, yeah, of course. And so that building fit perfectly into my buy box. It had an expiring lease. It had a tenant that wanted to stay long term, and it had below market rents. That was another value add that I haven't touched on yet, but below market rents, because these leases are often so long. Sometimes towards the tail end of the leases, the rent amount gets below market value, especially with the incredible run up in lease rates that we've had over the last couple of years. If a lease is 5 or 10 years long, by the end of that lease, sometimes it's below market value. And sometimes that owner wants to sell at that point. And so that's really where the opportunity comes in, when there's an expiring lease and a tenant that wants to stay and below market rents. And so I can purchase that property, get a lease extension from that tenant that wants to stay in that building, and increase the rent. So perfect example, just last week, I signed a 2-year lease extension at a 20% rental increase on one of my properties. And so this is a tenant that wanted to stay, and their lease was coming up. And so I signed them to a 2-year extension. They had that in their lease that they could renew for 2 years at market rate. And market rate was 20% higher than what they were just paying. And so that deal came off market. A lot of the other deals that I find are on market. One of the websites that I look at is Crexy. Another website you could use is LoopNet. And my advice for finding these types of deals is get really specific in your filtering. Because if you're looking at every deal, you're looking at nothing. And so I really get specific on what I'm looking for, and I filter the search terms down pretty narrowly. And so I'm really looking at very specific properties.
Yeah, that's really an important strategy, is to define what you're actually looking for and kind of sticking with it, because you can get pretty distracted by that shiny object syndrome, I'm sure.
It is maybe one of the single biggest, if not the single biggest, one of the biggest mistakes that I see newer investors making. They're looking at everything. They're looking at an office building in Columbus, Ohio, and then they're looking at multifamily in Atlanta, and then they're looking at a retail strip center in Sacramento. And any one of those deals might be a good investment. You might be able to make money on it. But if you're not focused and you don't have the experience to be able to be flexible and take down those various types of properties in different markets, you're just not going to be successful, in my mind. And so I feel like one of the biggest pieces of advice I can give to newer or aspiring investors is to focus. Even if it's not what you end up with long term, at least start out with a focus, whether it's a certain zip code, whether it's a certain block, a town, a state, an asset class. Get as narrow as you can, get some experience, and build your confidence. And then after that, as you get some experience, then you can branch out and do some other asset classes or other markets as your experience expands. But to start out, you really need to focus.
You've alluded to a couple things around this, and I'm going to say it's around the mindset aspect of this again. And some of the information that was sent over talks about how you overcame some of your limiting beliefs on, like, I'm not an entrepreneur. I'll never make that much money. I don't know how to start a business. Some of these things, like when you say focus, was some of the information you're consuming to break through these mindset issues part of that?
Absolutely. Yes. I mean, I told you the story about starting my working career as a teacher, and public service workers like teachers and police officers and firefighters and social workers and people like that, and maybe W-2 workers in general, we just sort of have this mindset that, and it's subconscious, but we get in this mindset that other people are providing for us. My paycheck just shows up every other Friday in my bank account, and I show up to work and I follow the rules, and things just fall into place. If I don't screw up too bad, I'm gonna be okay in this situation, and I won't make tons of money, but I'll have some security. I've got benefits, insurance, steady paycheck, that kind of stuff. And there's nothing wrong with that, and that's fine. It was not okay for me. I wanted more. But I felt like I didn't have it in me. I felt like maybe like entrepreneurs were born and not made. And there's a certain subset of people that either had it, or, other people, most people, they just didn't have what it took. And that was my thinking until I got into it and I started having success. And I realized that for the most part, entrepreneurs are made and they're not born. It's not like these, there are certainly exceptions, the Elon Musks of the world, and people that just seem to be born to do their own thing. But I think if you fall into that mindset, like I fell into it, like, oh, I'm just not an entrepreneur, I think you're selling yourself short. And know that it is possible to make yourself into an entrepreneur and make yourself into a business owner. And know that on day one, you will not have all the skills you need and you don't have all the experience, but you can take the first step and you will learn the skills that you need along the way. And one of the books that was really helpful in this development was Tim Ferriss's The 4 Hour Work Week. And so that's really a book just about teaching you how to make your own life and make your own business and have success at it. And so it's books like that that really helped me and helped develop my mindset. And then, of course, like we talked about with that first deal, having some success. I think one of the greatest teachers is one of them is failure, but then the other one is success. And so building that confidence and just, when you have those moments of saying, hey, you know what? When I started this project, I didn't know what I was doing, but I learned along the way. I figured it out. I got some people along the way to help me. And look, I just made some money on this real estate deal. What if I did it again? What if I did 10 more of these deals? What if I did 50 more of these deals? How many deals could I do over the next 10 or 15 years? How much passive income does this duplex create? And how much passive income do I need to retire from my W-2 job? And so I really, from a mindset perspective, my dad was a teacher. My mom was a W-2 worker and a stay-at-home mom for a while. And, they still kind of think I'm crazy. A lot of my family members, all of my family members are W-2 workers. Nobody in my family is an entrepreneur or has their own business. And so I did not have the support of my family. I did not have my parents giving me money to start my business or anything like that. It was truly bootstrapping it. It was my wife and I creating a vision that we had for ourselves and for our family and for our lives, and pursuing that vision one step at a time.
You've brought your wife up a couple of times here now, and that being part of the conversation and creating this vision. How important was it to have your spouse involved and building out this target so you knew what to aim?
Having the support of a spouse is really important. And I hear stories about people not like trying to go at it alone, sort of almost fighting their spouse. And fortunately, I can't relate to that. My wife and I have been for the most part, on the same page since we started investing in real estate. And it was that way from the beginning because in the early days, we were putting so much on the line. We were truly bootstrapping it. We would, to fund like that first deal that I told you about, to fund it, to come up with that $67,000. We were, we were taking like 0% balance transfers on credit cards, and we were taking private loans from friends and family. And so I felt like to be doing that kind of stuff that could really impact your credit and your future earning potential, your future ability to get loans, that sort of stuff. It was really a mandate for us to be on the same page. And we now have two little kids. And so she is less in the day-to-day stuff. She still does a lot of our bookkeeping and a lot of our back end kind of stuff, getting insurance and keeping up with paperwork and that sort of thing. I'm more in the day-to-day, finding deals and operating deals, but being on the same page and just having each other's support for when things would come up and we had to solve problems, we could put our heads together and figure out how to solve these problems. And okay, we need we need 30 grand to close this deal next week. Where's this money coming from? And then we could brainstorm and figure stuff out. And so I am not I don't really like paperwork and the detail stuff. She does. That's really where she excels. And so she's able to excel in that, while I'm able to go network with people, come on podcasts, get deals, operate the deals. And so, having us operate as a team really has been a big contribution of our success.
Sure. One of the things that you early in the episode, you were talking about how you moved into the single tenant industrial properties to become more passive. As a business owner, what steps have you taken, whether it's your process, procedures, how you're building your team, that type of thing? What type of steps have you taken so that you remain as passive as possible?
One thing that really helps is, this isn't a process or a procedure, but it's tenant screening. And so we've really, since the first tenants we had, a really important piece of having an effective rental property portfolio is having great tenants. And so I still own some residential units. I have an 8-unit multifamily property. And having great tenants is absolutely crucial, because anyone that's ever had a rental property with a bad tenant knows that a bad tenant can basically ruin your life for the period of time that they're in your property. And so we've just been really diligent about selecting the right tenants, and it makes a huge difference when you do those reference checks and background checks and credit checks and employment checks. And so you have a really good idea of who this tenant is when they're moving into your property, even before they move into your property. So having great tenants really cuts down on the intensity of the management, because a lot of times these tenants will either not cause problems in the first place, or they can figure out how to solve the problems themselves. So you're not getting called about light bulbs being out or batteries going dead in the thermostat, things like that. A great tenant, a lot of these great tenants will just solve these problems themselves. Other things, other processes and procedures that have helped us be using tools like, we use apartments.com for our property management software. It's free, and it basically includes everything we need. And then another tool that I was going to wait to mention until later in the conversation, but since it came up right now, is we use a tool called monday.com. And it's probably been mentioned on your show before, but it's basically a task management cloud-based software where it's highly customizable. And it's essentially glorified checklists, but you can create checklists and processes and procedures for nearly anything. And you can assign due dates, you can assign tasks to certain team members. And so for all the repetitive tasks that we have, whether it's closing on a new property, whether it's the turnover of a certain unit, we have a list of tasks that has to get done. And so we just put that into action whenever one of these items comes up. Oh, we have to turn over a certain unit. Okay, we go into monday.com and we activate this checklist and we do what the checklist says, so that we're not trying to, reinvent the wheel every single time we have a tenant turnover, or every single time we go to acquire a property or dispose of a property, or any other repeatable task like that. And so those are a couple of the things. Something that I'm working towards right now that I've not had success with is hiring a virtual assistant. And I've had a couple failures so far. I have not had any successes yet. And so I hope next time we talk, Jack, that I can tell you about the success that I've had in hiring a VA to do some of those repeatable tasks.
Yeah, that VA has been a bit hit and miss for us as well when it comes to that type of thing. But mostly, when we were using VAs, we were trying to use them to talk to distressed sellers. And it was just one of those things that couldn't get them to think outside of the script. And it proved to be difficult. But anyway, reminding everybody one more time, jonathanhayek.co. That's going to be a clickable link in the show notes, jonathanhayek.co, to learn more about what Jonathan is up to. But Jonathan, this has been a fantastic conversation. I really appreciate you being so transparent on a few things. But before I jump into the rapid fire questions, is there a question or concept you wished we would have covered here so far?
Honestly, Jack, I think you've done a great job. I think capital is always a question that people have. When you start from nothing, I was a teacher. I started with no money. So, how do you get started, with some of those early deals when you have such limited capital? That's always an interesting topic to cover.
Yeah. And well, what's your typical answer regarding that? Like, where did you find those initial, you mentioned a couple situations where it was the 0% interest rate credit cards. I don't know if a lot of people would advise that, although there's some real estate gurus that sure push that concept with business credit cards.
I would not advise it. I am sharing my experience and telling you what worked for me. But I told you about my wife earlier and how she really likes to pay attention to details. So if you are not a detail-oriented person and you don't keep track of credit card due dates and when your 0% period is up, do not do the credit card balance transfer strategy. But we, as a team, we are detail-oriented people. I have a history of doing some credit card hacking for travel rewards and that kind of thing. And so I'm an experienced credit card person. And so that strategy worked for us, but it is certainly not for everyone and certainly not something I would advise people to do. Other strategies that really worked for us in the early days of getting capital was talking with friends and family. The first deal I ever did, I got some private lending from a friend of mine. And so I paid him 10% annualized. And in exchange, he had a mortgage and promissory note on the property. And so just talking with friends and family about people that might be interested on getting a return for their money. That's one strategy. And then as I got some experience using local banks has been absolutely crucial to my progress and development. I'm closing a deal next week with a local bank, and a bank might be a little hesitant to lend on your first deal. But once you've done a couple deals and you've got a track record, and you can show, hey, these are some successful deals that I've did. Establishing relationships with local bankers are really can be crucial to growing a portfolio.
Yeah. No, that's some great tips and suggestions there. I can't emphasize enough regarding the local banks. There's just a lot more flexibility with a small local bank versus some of those big boys. And sadly, more times than not, a lot of people will approach their Wells Fargo's and US banks and what have you before those local banks. But it's building those local relationships that's going to have more longevity and a better outcome.
Absolutely. And Jack, if I can add one thing, the most difficult property that I've ever got a loan on, I bought a vacant office building about 2.5 years ago. And if you know anything about office right now, it's not exactly thriving. And I got a loan on a completely vacant office building from a local bank. This was a bank that I had done, probably 15 deals with. And so I could go into my banker's office and I can say, hey, that office building at Lincoln Way and Van Lennon, I'm buying that. I'm under contract for it. Do you have any interest in it? And, he was like, oh, yeah, I know exactly what building you're talking about. And I was able to get a really attractive loan on that property. And so, the power of working with someone local, they often know what properties you're talking about. They know the area, they know the streets. And so it just, it's what these local banks are built for. They're built for loan lending to local businesses. And that's what you are as an investor. So definitely embrace that relationship.
What did you do with that office space? Is it still office space?
It is. That was my first commercial property. So this was in the period where I had this idea of transitioning to commercial properties. I still had a portfolio of small multifamily. And so, I drove past this office building like almost every day, and it's just sitting there vacant. And so I toured it, and it was divided up into these 10 different little offices. And so I thought about it like a multifamily property. I'm like, well, I can just lease up those offices to small business owners. And so that's what I did. So I put in about $75K in cosmetic upgrades, paint, carpet, redoing the parking lot. And in a lot of the offices, I put up like a shiplap accent wall to make it kind of a trendy space that someone would want to work in. And so it worked. I leased up all the offices to things like a local painter who needed a space for his bookkeeper, to a massage therapist, to a hypnotist, to a therapist. So people like that need an office space to work outside of their home, because as we have all learned over the last few years, working from home is not as easy and straightforward as we want it to be, especially when we have little kids and dogs and all kinds of distractions. A lot of these people just need space to work outside the home. So I leased it up and sold it. I held it for about 18 months and sold it I made about $110,000 on that property and was able to 1031 it into another property. And so I'm not anxious to get into another office property, but I learned tons of lessons on it and really glad I did that project, but not looking to buy any more office right now.
Well, that's awesome to hear. Again, jonathanhayek.co. But if you're ready, Jonathan, we're going to jump into the rapid fire questions. You've answered some of these already, so if you feel like you got to repeat yourself, that is perfectly fine. But first of all, what lie do real estate investors tell themselves and sometimes to others?
You can't do this. Yeah, it's a really great question. I have tons of limiting beliefs, like I talked about earlier, but I think, for people like myself that have, for whatever reason, naturally limiting beliefs, we see this deal, this opportunity comes across our desk, and our first reaction is, I can't do that. I don't know how to do it. I don't have the money to do it. I don't have the connections to do it. I don't have the skills to do it. And sometimes that reflex is helpful. It keeps you out of sticky situations, but sometimes it just keeps you where you are and keeps you in your comfort zone. And so instead of saying, I can't do this, I think about, how can I do this when an opportunity comes up that I feel like, I'm not sure how I'm going to do this. How could I do it? What would it take? What sort of capital partner would it take to take this down? What broker do I need to talk to? What other information do I need in order to feel comfortable with this deal?
Do you have a book recommendation, or what are you reading right now?
So I'm going to, if you object to this, let me know. It's a variation. I know you don't like Think and Grow Rich.
Well, I like it. It's just that everybody gives me that answer.
Sure. So it's a variation of Think and Grow Rich, 3 Feet from Gold. So this is a book that's not typically, at least in my circles, not typically talked about. I think 3 Feet from Gold is phenomenal. It's a fictional somewhat fictional portrayal of the concepts of Think and Grow Rich, kind of like Rich Dad Poor Dad. It airs a little bit on the cheesy side, like Rich Dad Poor Dad, or The Go Giver is another one that sort of has a fictional take on some really important concepts. Concepts are phenomenal, and it's told in a way that's really accessible.
3 feet from gold. If you could go back in time and give your younger self one piece of advice, what would that be?
You can do this. I think the theme of this conversation has been mindset for me. And early on, I bought my first rental property, my first, real estate investment when I was 32. And I considered it when I was in college. I thought I could house hack. I thought about buying this $120,000 house and renting it to my college friends to live in. But then I just thought, how am I going to do that? That's a dumb idea. That'll never work. And I think back, man, if I would have done that when I was 19 or 20 years old, how could things have been different for me today? And so, yeah, I think I would just tell myself, you can do this. You can figure this out.
What single strategy, process, or tool have you implemented that has had the biggest time-saving impact to your business?
I'll go back to what I mentioned earlier, Monday.com. It's probably been mentioned before, but it's an inexpensive and very simple tool to use that can really help to solidify your processes and procedures to break down complex tasks into easy, simple, repeatable tasks.
Sure. Well, Jonathan, this was a great conversation. It was great meeting you. Again, it is jonathanhayek.co. That's going to be a clickable link in the show notes. But it was great meeting you. I hope you'll come back again sometime.
Jack, thank you so much for having me. It's been a pleasure talking with you, and I would love to talk with you again sometime.